we need to talk about MultiverseX. So hey everyone, welcome back to Upside Down Data. Today I want to talk about MultiverseX and the impressive performance it has shown out of the October lows and whether or not we might expect a continuation in this uptrend. So I don't think EGLD has gotten enough credit for how well it performed off the October lows. It was up about 150% at the top of this wick, currently trading up about 100%. And I think the question on a lot of people's minds then is, given this performance, are we likely to see a continuation from here, or might we need to consolidate or maybe even have a correction? And I think EGLD's an interesting asset to watch here because it actually did outperform a lot of other alts in this move up. I don't think it gets enough credit for that. I haven't seen people talking about it. It has outperformed a number of others, though of course it has not outperformed all of them. So to answer the question of whether or not we might expect a continuation, I want to look at some of our models and see what they're saying. So this is our short-term upside downside potential indicator. It is a risk indicator. So basically higher values mean higher risk, lower values mean lower risk, and it's reactive to moves that play out over days to weeks, so more short-term in its time horizon. And we have this model live over at our website, partydigital.io, link in the description if you want to check that out. So if we just look at where we are right now with the short-term UDPI, you can see that we're currently up at about 1.77. And notably, this is a similar level to where we found resistance in the past. You'll notice that with some of these other rallies, they've tended to run out of steam or at least had short-term corrections when the short-term UDPI has gotten up to this same general level between about 1.5 and somewhere about 2.5. That general region has acted as resistance in the past. So it would not surprise me at all if it does again, if we have to spend some more time consolidating here. And that would not really be shocking. The broader crypto markets, I think we're getting a bit overheated. There's going to be some consolidation, I think more broadly is a reasonable expectation. And so we might just see more consolidation here, maybe have to go back down, try to retest some lower levels, flip those into support. So previous resistance, maybe flip that into support, or even this current support range we're in right now, maybe that will act as support here and we more just range sideways instead of having to correct down. But I do think EGLD having to slow down and catch its breath would make a lot of sense here, especially given this short-term UDPI level. Now, it's not to say that we can't continue to rally. We're not anywhere near the top of the scale here. The top of the scale is 5. Again, we're at 1.77. So there is more room to move if EGLD wants to do it. But I think it's unlikely personally that EGLD will just on its own go ripping to the upside if the broader crypto markets continue to consolidate, as it seems like they might want to do now. And so that's where I think my base case personally is that at least short term, EGLD might need to consolidate. The other reason I'm saying that is if we look at our trend confidence indicator for EGLD, that's what I'm showing you here. This is a model that looks at the trend in assets in and how confident we should be in that trend. So for example, if you're in an uptrend and the TCI is trending up, that's a good sign. If you're in an uptrend and the TCI starts trending down, that's a bad sign. That might mean a more notable correction might be coming soon. And if we look more recently of what was going on with the TCI, we actually see that coming out of this September low here, you actually saw the TCI building up steam, moving into an uptrend. And that actually led the way. Before price even started to reflect that, the TCI was suggesting, hey, things are starting to look a little bit better for EGLD. Uptrend might be forming. And indeed, that's what we saw. But now, after this explosive move, we've actually seen the TCI start to trend back down. And even as price has been moving up here the last few days, the TCI is actually trending down, a bit of a divergence, which might suggest that the momentum is leaving the space and that even though we might have some more room to move, that certainly can happen, that we might be getting towards the end of that and we might need to spend more time consolidating before that next big push up could be likely. So that's another shorter term consideration that in conjunction with the short-term UDPI and how extended it is, I think it's very plausible we have to spend more time consolidating here before that next leg up can happen. But importantly, these are short-term considerations. Whether or not we spend more time consolidating, whether or not we have to come down and test lower levels, ultimately that might not mean much in the longer term. And so we can zoom out a bit and we can talk about our long-term upside downside potential indicator, which is what I'm showing you here. So this is reactive to moves that play out over months to even years, so much longer in its time preference. And we can see here that it's not nearly as overextended. So the short-term UDPI was up at about 1.77. Long-term UDPI is down, still below zero, negative 0.64. And so what that's basically saying is that the model is estimating there's currently more plausible upside potential long-term than downside potential even after this move up. So from that perspective, then, this might not look as bad. So for the longer term perspective, we're not really looking at like a place like we were, for example, up here, where you might expect a longer term deep correction. So we'll have to see how this all plays out, but I would expect that if we do spend time consolidating here or even correcting, that would give time for the short-term UDPI to cool off, and that might even allow the long-term UDPI to stabilize or maybe even cool off a bit, TCI to reset, which then could set the stage for that next leg up. You always like to see rallies starting from lower risk points than higher risk points. And so if we were to see the short-term UDPI cool off a lot before that next rally, that might just mean that that next leg up can go further than if it wanted to do it right now. I think if it went right now, it would probably just get extremely overextended, and the possibility of a longer term correction might be more likely. I think actually what we might want to see is healthier market structure. Move up and then set in a higher low, move up, higher high, higher low, etc. Instead of just a vertical move to the upside, which might be fun while it lasts, but then can set the stage for a very deep and painful correction that might actually be longer lasting than if we set in that healthier market structure. And so that's where I think it wouldn't be a bad thing at all to see us tap out here. And in fact, we might not even want to go in and test those highest risk levels, because in the past, those have led to some pretty deep corrections coming out of them. So those are some considerations based on our models. Again, if you want to view these live, you can do so at our website, claritydigital.io. Link is in the description. But if we zoom out a bit more on EGLD, I think what we can see here is that if this really is the bottom for EGLD, if this September-October 23 actually ends up being the bottom, and we're really in the early stages of a new bull market, then in some ways, some of those shorter term considerations don't matter all that much. If we have to spend more time consolidating here, if we correct, we move up, as I was talking about before, that might not matter, because if we just look at the previous bull market for EGLD, do you really care if you were buying here, if you were buying at the absolute bottom or here? Certainly it makes a difference, but ultimately I think anyone looking back would say, whatever, I would happily be buying EGLD down at $1.8. I'd happily be buying it at $2 and then riding it all the way up to, $570. Anyone would have been happy to do that. And so if you think that EGLD is eventually going to set in a new all-time high, in some ways, does it matter if you're buying it at $66? Does it matter if you're buying it at $46? Does it matter if you bought it at $25? Technically it does, but ultimately in hindsight, if we're just trading up above all-time highs eventually, I don't think anyone's going to look back and be all that upset. It's all just going to look like one big accumulation zone before the fireworks started. Now, one thing that I think is important to consider when we think about that, of will EGLD trade above its previous all-time high or not? There's some things that we want to keep in mind when we look at that. Now, obviously, just from a fundamental perspective, if you think that EGLD is going to win out long-term, then you probably would expect it to clear off to all-time highs. But I want to talk about the supply side and just how that factors into this question, aside from the fundamentals and all that, which is a bit more of a subjective evaluation in terms of how far people think it's going to take a project. So there are a few reasons why I think watching the supply of an asset is important, especially when considering longer term prospects. So for EGLD, we can note that there's been a pretty dramatic increase in its circulating supply since back in late 2020. So there it was at about 13.7 million, currently up at about 26.2 million in its circulating supply. And the reason why this is important is that price is determined by supply and demand. And if you have greater supply, then you would expect that there need to be greater demand to get you back up to that same price point. And so basically, when you're thinking about will EGLD go and surpass its prior all-time high, You might think that that's likely because of fundamental reasons, etc. But part of that thesis needs to be that those factors will lead to a greater amount of demand next time. That whatever demand was present at this prior all-time high, you would expect you'll probably need greater demand to get higher than that in the future because we are now dealing with greater circulating supply. The environment in which EGLD finds itself is different. There's more circulating supply out there now, more potential sell pressure, etc., etc., etc. Generally speaking, the more supply, the more demand you need just to get back to the same price, let alone to break it. So you might think so it's perfectly fine if you think that that's not going to be an issue, that EGLD has very strong fundamentals, is going to attract much greater demand next cycle, and that's all going to be fine. Certainly possible. But I do just think it's important to watch this factor and just keep it in mind that to get back up here next time will not be as easy as it was to get there the first time. So just something that's important to keep in mind. Now, the good news about the supply dynamics for EGLD is that I believe at this point, all of the supply that was going to be vested to founders and early investors have already been vested. And so those are already a part of the circulating supply. And the remaining circulating supply to come out before we hit the max supply is just in validator reward subsidies. So that's good news because it means that there's not going to be these big unlock cliffs like we saw here, where there's big jumps which can add a lot of selling pressure to the market very quickly. Instead, it's likely to be this kind of steady inflation until we ultimately hit that max supply. And the other good news is that MultiversX is considerably closer to hitting its max supply than a lot of other altcoins that are out there. And it just means that the remaining amount of dilution is lower than some other projects. So this, in some ways, this big increase in inflation is kind of a one-time deal. And so if MultiversX, if EGLD can have that demand to break it past this all-time high in the next cycle, that increase in demand, then whatever the next cycle would be, it would not be dealing with these same dynamics. It wouldn't be possible for this massive increase in circulating supply to happen because it probably would be getting closer and closer and closer to its max supply, and the amount of inflation just necessarily has to be lower. It's literally impossible for this same increase to happen again. So that is a good sign. So to wrap us up then, I think EGLD could do a lot of things in the short term, but my current base case is continued consolidation, maybe correction before we see that next leg up. I'd like to see short-term risk cool off more before thinking that's more likely. But if we look at the longer term time frame, it still doesn't look particularly overheated at all. This still looks quite consistent with early bull market behavior. And then longer term, I think it's totally possible that we're just in that early bull market phase. In the future, it'll look very similar to something like this. And anything that happens in here, no one's really going to care too much about in a year's time based on what might happen next. Now, obviously, the caveats here is that if we have some massive recession or something like that, all bets are off. But if we're just assuming that we are in the early stages of a bull market, which currently seems to be the way the market's behaving, then the future could be quite bright for EGLD. Now, none of this is financial advice. You should make your own evaluations of this data and where you think EGLD could go from here for yourself. But that is what I'm looking at. Those are some of the data points that I am taking into consideration. So if you want to view our models live and more, you can do so over at our website, polaritydigital.io, link in the description. And if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there.